Hello, everyone. Welcome back. Today, we are going to be looking at topic number three, how or understanding how Excel template works. I mean, here you want to learn, or I want to explain to you how this Excel template that I will give you at the end of the training, how it works. So, when I say how the Excel template works, what I actually mean is that the flow of data, how the flow of data goes into this uh, template. That is what I want to show you. Okay, so um, now the idea is that, and the importance is that if you do not understand the flow of data, it will become very difficult for you to one work with the Excel uh, worksheet and or workbook rather, and also trace issues. It will become very difficult for you when there is any issue along the line or your account is not balanced in any way. Yes, it will become very difficult for you to trace where the issue is coming from. So it is this topic is very important in this training, very very important. So the other reason why we had to do this is that the training we held in 2022, sometime in 2022, an accounting training like this, and so the facilitator in that training, a senior colleague, taught the participants how to prepare accounts and how to build templates that they will use to prepare the account. So after the training, one major feedback I got was that they found it difficult to build their own templates. Okay, they found it difficult to build their own. Actually, it is stressful and difficult to build. Okay. So that is the reason why I have decided that the major thing I will do in this training is give student templates, give student my own template. But if I'm to give you my own template, the way template works is that the person that built the template built it for a purpose, for a reason, and it must have taken years of addition, correction, and all that for you to have a perfect template. So, and it is only the owner of the template that knows how the template works. So myself, I don't even like using people's templates. If you use someone's template, if I get someone's template, it will take me so many times before I understand the template, before I could start using it and all that. So because I understand this, I feel you might likely encounter issues or difficulties to use the template. So there is need for me to actually show you how the template works. How the data flows through each part of the template. So the template is a workbook, and in the workbook we have different sheets in the workbook. So so the major things you need to note, or the major the critical sheets in this workbook that you need to know of, they are just seven in number. They are seven. They are very important. We have a total of about 15 or so sheets in this workbook. But the critical ones are just seven. So they are listed there. We have the journal entry worksheet, the ledger and the trial balance, because they are together. The notes, the statement of profits or loss, the statement of financial position, and the cash flow statement. And this is the order in which the data flows through them. This is the order. So without wasting so much time, let me show you how it works. So where the Yes, this is where you start working with the this is where you start working uh, with the template. So the thing is, the first thing you do is to journalize your transactions. The transaction that is coming from your bank statement, you journalize it. And what you will see is that you will see that before this journal, I have my summary. This is the summary of the the uh, the transactions that I've analyzed. This is the summary. I generated the summary of the transaction that I've analyzed. And one thing is that I like to have my all my files in one workbook, under one workbook. That is the way I love to work that way. Yeah, and the thing is, when you are trying to use so many files, at the end of the day, there will be mistakes. There will be, the linking. Sometimes some files you might misplace them. You must transfer them from, and you start getting error. But what I do is that I just bring my files. I bring them here. So later I will show you how to bring your bank statement, how to put it in the worksheet. I will show you later on. So this is the summary. Where is the summary coming from? It's coming from my bank statement. This is my bank statement. So after analyzing my bank statement, after you know putting everything in order, so I now generated this summary. Okay. So it is this summary that I brought here to journalize. Okay. So I brought the summary here to journalize. So after journalizing the summary, the bank summary, after doing the journal, after raising the journal, I will show you later on how to do the journal. What is critical at this point is that the summary of the two sides, you remember our double entry principle and the accounting equation, the summary of these two sides or the sum must be equal. They must be equal. And this is a check here to see if they are equal. You see, they must be equal. And like I said in the last topic, the major purpose for the accounting equation and the double entry principle is to reduce error. So if they are not equal here, it means there is an error somewhere. So we have to correct the error from here. Okay, so you must make sure that the journals, the two sides of your journals, are equal. So once you are done with the journal, then all these transactions in the journal that you have journalized, then you transfer them to the ledger. So this is our ledger. So the trial balance is added to the ledger, you know. So this is our ledger. Now, from here we have our account code and account classification. Basically, this side is what is known as your chart of accounts. So maybe you are attending an interview and someone is asking you what is chart of account. Chart of account is simply when you break down your account. Remember, I taught you that there are 5 accounts in every financial statement, and these are the accounts. You see, this is the asset, and I taught you that the assets we have the non-current asset, we have the current asset. So chart of account is when you now add code to all these breakdowns of the account. Okay, so let's say our asset is running from 1,000 to 1,999. Our liability is from 2,000 to 2,999. Our income will be from, our equity will be from 3,999 and all that. So this is chart of account. This is what is known as chart of account. You see here, this is what is known as chart of account. You attaching code and breaking down your account into subcategories. Okay, that is is known as chart of account. So here on the other hand, this part is our opening balances. So what you will get when you are, for instance, if you are prepared for if you have prepared your account for year 2031st, you prepare your account till 31st December 2021, and this is 2022, this is December 2022 that you are preparing the account, you have to bring the closing balances of 2021 year. Okay, you have to bring the closing balances of 2021 year. That is what this side is meant for your opening balances. That is what this side is meant for. But the critical thing here to me is that the most important thing here to me is that these two sides must be equal. These two sides must be equal when you are bringing your opening balances. It must be equal, and this side will show you the difference. If there is any difference, if there is any error, this side will quickly point it out that there's a difference of 50,000 though. So you quickly see it, and you must correct it at once. That is the essence of the opening balances. Okay. Now, if you are just starting out, if you are preparing the account for the company for the first time, or either for your clients or for your employer for the first time, then you know there won't be any opening balances. So this place will just be empty. Okay. So once you are done with your opening balances, if there is none, then the next thing is transactions within the year. So what is your transaction within the year? So here, what you will do is that all these journals that you have raised here will now be brought into the transactions within the year. The journals that you have raised here, okay, these journals that you have raised here will be brought into the transaction within the year. So again, the most important thing for me is that then like I said, you debit and credit, you debit and credit, you debit and credit. At the end of the day, these two sides must be equal. That's the most important thing to me. Remember our double entry principle and our accounting equation. Debit the receiver and credit the giver. And for the accounting equation, the total of your asset must be equal to the sum of your equity and your liability. So these two sides must be equal. If there is any issue, you will get it here, or you get it at the top here. Then you can quickly correct it. That is very important to me. Okay. So once you have been able to bring in the transaction within the year, then the closing TB. Anyway, it's just closing TB, or we can call it okay, this should be closing ledger. Closing ledger balance. Okay, closing ledger balance. Yes, let's put it as closing ledger balance. Okay, so this is our closing ledger balance. Okay, so automatically, once you bring in the transaction for the year, your closing ledger balance will come up. You will have these balances there. And again, these two sides must be equal. These two sides must be equal. And one thing you should also notice that you see these two sides that have I colored this side transaction within the year, and 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 journal entries are those side that you input your data. This place now, you see there's formula there, so it brings the balances automatically. There's formula there, you don't need to touch this side at all. You don't need to touch it. You don't need to touch this side, just leave it as it is. So the formula there will just bring the figure to you. Okay. So once you have gotten your closing ledger balance, okay, then the next thing is, there are some other transactions you want to post, like you want to recognize payables and receivables. You want to recognize closing inventory. You want to recognize depreciation. Whatever adjustment you want to make, then you would have made the adjustment. You come and make the adjustment at the bottom of these journal entries. Okay. So I tried to separate it from this. So you make your journal entries here, depreciation and all that. You make your journal entries. So once you have made these journal entries, then you bring them into this journal entry side. So as you debit one side, credit the other side immediately. As you debit one side, credit the other side immediately until you are done with all the additional journal entries that you have raised. So again, what is important to me is the balances. The two sides must be balanced. If it is not balanced, you get an error here or you get an error at the top here. Okay. So once you are done with that, once you are done with that, right? Once you are done with that, then you get your final TB. You get your final TB here. So again, this final TB has a formula. There's formula there. So you don't need to touch it. There's formula there. Just leave it. The formula will bring up the will bring out the balances for you. Okay. There's a formula there. That is that. So that is how the ledger that is how the ledger, you come up with your ledger and the final trial balance or your trial balance. Okay. So another very important aspect of this uh, ledger and trial balance sheet is that this control side, I love this side so much. This is control side. Okay. And let me explain how the control works. You see, here, this is statement of financial position check, cash flow statement check. These two sides must be, you must have zero here. And the principle is that if your ledger is balanced, if your final TB is balanced, then automatically your statement of financial position must show zero here. Your cash flow statement must show zero here. That is the principle behind this. And that is the principle behind this template as well. I mean, this ledger and the trial balance. That is the principle. If the postings you have made is balanced, everything is balanced from the beginning, then here you must have zero. It must be zero. And if the what would have led to it not to balance or to have difference here is that it means possibly you have added an item and the item has not flown to the balance sheet or to the cash flow statement. Okay, that is why you have difference here. That's majorly what usually happen, that you not have your balances to be to I mean it will not be balanced and this place will not be showing zero. So this side must be showing zero. It must be empty like this. Okay. The other thing you need to know is that here here I've brought in the here you see this is the column for this place is for our assets. So I've brought out all the assets, all the items that are assets. Okay, I've listed them here, you see. And what I've done is I've brought the accumulated depreciation too under it so that we have my net asset, because what you will see on the balance sheet is the net asset. So this figure, this 2628,654.81 should be what you will see on the balance sheet as your total assets. Are you with me? So what I'm trying to do is that I'm trying to say, oh, I've summarized my assets here. At any point in time, when I get to my balance sheet, this is what I should have. These items are what I should have on my balance sheet. The same thing is, the same thing applies to my liabilities. This is the total of my liability. So these are the items I should have on my liability when I get there. So it is important because when you are looking for difference, it is frustrating to look for difference when you are preparing account. Okay, it can take you hours, it can take you days to find it. The same thing applies to the equity or capital. Okay, so I've listed the items under it. So I have just one item for equity or capital, right? That is that. Now, The other interesting part is the control for income and expenses. So I've added the items for income here. So under this part now, you see our income item. That's what we have, 10.2 million, right? And this is the total. The same thing applies to expenses. We have 10 million, okay? And these are the items for the expenses. These are the items for the expenses, right? These are my items for the expenses. And at the top here, what I've done is that I said this place must show zero. And the thing is, look at the notes here. I put a note that this is control to confirm that the net income or profit after tax is same with the difference between income and expenses on the TB. So what I'm trying to say is that there's difference between the income and the expenses, which should be our net income, right? If everything we have done is correct, this difference, if we have posted all the adjustments and everything, if they are correct and we have brought them here, the difference between these two must be the same as the difference between our statement of profit or loss. So look at what I've done. Here I said the difference between this place, I mean the income and expenses, minus the difference between on my minus my net income on the statement of profit or loss. That's what I've done. If you see the formula, that's what I've done. So they must be the same. Okay. Okay, the same decision between net income from TB and is still the same thing here. And that's what I try to confirm here. You see net income from TB, and this is net income from statement of profit or loss. You see that they are the same. That is why I have this control here. I love control so much. It makes your work easy, right? So when you are preparing your ledger and your TB, you always look out for this. Always look out for. However, that does not mean when you have differences that you should stop your work. Okay, you can always continue your work and look for the reason later when you are working on the account. Sorry, I mean when you are working on the statement of profit or loss and statement of financial position and cash flow, you can always trace the issues from there. So once you have done this successfully, and you have a trial balance, then the next stop is the note to the account. So the note to the account is important because on the statement of profit or loss and balance sheet, what you have is the sum of some items. So you don't have a list of all your items there, like a list of all the expenses. No, you just have a summary of the expenses on that. And so the note is more like giving you more information. And the other reason is the IS1 on presentation of financial uh, reports wants us to said we should have our note to the account to show to show more information on the account, to provide more information on the account to the users. Okay, so here we have the turnover or revenue or income. You can see that this is flowing from the TB. This is flowing from the TB. Our cost of sales is flowing from the TB as well. Everything is flowing from the TB. Okay, they are flowing from the TB. So, so it also makes your work easier when you are looking for error. You know, you just trace to the from the TB to the note, from the note to the account. So that is why we have the note. So we have all our notes. We have the fixed asset schedule for tracking our assets and depreciation. We have the note 6 to 9 for basically for our balance sheet items. Okay, for our balance sheet items. We have them there. We have them there. You can see they are all flowing from the. They are all flowing from the. What do we call it? From the trial balance. and we have this as well. So these are the notes. So again, remember, the flow is from our journal to our ledger to our trial balance to our notes. Once we have all the notes like that, once you have all the notes like that, then the next destination for your data is the first one is the statement of profit or loss. So you have the statement of profit or loss. So what you see is this is the statement of what you see is flowing from the notes. You can see the data, they are all coming from the notes. They are coming from the notes, notes. So they are all coming from the notes. Okay. If you look at this right hand side, if you look at this place, if you did you see what I did there? And this is no more like a control. This is not really a control. This is this is the control I put there is that I'm trying to control I'm looking for the difference. So there was a difference. So I was looking for a difference. So you do more of this at times. So what happened was I saw that I'm not getting the same difference on the trial balance on this place. So what could have happened? So I had to trace everything, trace the total income, trace the total expenses like the cost of sales and the uh, admin and general and administrative expenses. I had to trace them. In fact, when I was tracing them, look at this place. I had to trace them one by one, line by line. Okay, that is one way to trace the differences. Okay, so you do more of this. So you can always delete this, and this will not show when you are printing the report. It will not show, right? It will not show when you are printing the report. So once this place is done, so there is statement of changes in equity. You can have this statement of changes in equity if you like. So it's just an addition. Then the major one is statement of financial position. Okay, statement of financial position. So the same thing applies to statement of financial position. All the items there, they are flowing from the notes. They are flowing from the notes. Everything is flowing from the notes here as well. Everything is flowing from the notes. Okay, it is very important. So here also, if there is any issue, if the if there is any issue, you can quickly line out these items here and trace where the differences are coming from. Okay, and look at what I've done here. So there is a check here. If there is difference, if it does not balance, if this balance sheet does not balance, this check will pick it. It will show a difference here. If it does not balance, it will show a difference here. And here, see another check here. The check is saying that asset equals equity plus liabilities, right? And that is our accounting equation, right? Okay. So this is the total asset, and this is the value of our equity. This is the value of our liability, and this is our total equity and liability. At the end of the day, the two sides are balanced, and we have zero here. Okay. So that is our balance sheet. So the next destination for your data is the cash flow statement. So basically, the cash flow statement flows from the from the statement of profit or loss and the balance sheet or statement of financial position. So it flows from these two accounts. That is where your cash flow statement is flowing from. It flows from these two accounts. You can say, okay, yes, it also flows from the note as well. Yes, you can also get it from the note. So you have the note, the standard of profit or loss, and the balance sheet. That's where the cash flow will pick uh, data from. So at the end of the day, at the end of the day, at the end of the day, there must not be difference here. You must have zero here, right? You must have zero here, and this is a check for your cash flow statement. So this is the cash and cash equivalent on the cash flow. You see, this is the cash and cash equivalent on the cash flow, and it must be equal to the cash and cash equivalent on the balance sheet. Okay, it must be equal. And a secret is that this is what they will check in the bank. When your client is submitting this to the bank, they will likely check this. So they can quickly pick an error from your work, or when is a professional or an experienced accountant is doing your work, this is what they will check. Okay, they will check this, and once it is not correct, they know that your cash flow statement is not correct, and they can quickly start tracing back errors to your balance sheet and to your statement of profit or loss and to the bank statement and all that. Okay, so it must be balanced. So these are the major sheets in this workbook. These are the major ones, and these are how your data flows through them. Okay. However, these are not all. We have some other sheets in this report, right? We have some other sheets. So let's look at them. The first one here is the cover page. Your cover page. Here you can change your name, the name of the business, just change it here, fine. Then the report, the heading for the report. Some of the statements too, they will pick this heading. Some of them, or most of them, will pick this heading, right? Okay. So the next page is the table of content. The next page is the table of content. Okay, you can see this title is picked from the cover page. This one is also picked from the cover page. So once you put this here, you have to put this here because it cannot pick from the cover page. Then others will pick, all other sheets will pick from, they will pick the name of the business from here. Okay, so you put the title here, you put the name of the business here, and this is the table of content. Okay, it means, what this means is that all these things has been numbered, and you can change the numbering because sometimes you might not want to add all this to the account you want to prepare for that business or client. I will not advise you not to do that. I will just advise you to use it this way. Just change it. Just change whatever you want to change there. Okay. So so brief history, brief history or company history. That's page one. So let me see. I want to show you how you can change the page number. Let me see if we can change the page number. Can we change the page number? Let me see. The number should be at the bottom here. It's always at the bottom somewhere here. It's always at the bottom. Yes, you can see. You can see. You can come here and change it. Right? You can come here and change it. Okay? Okay, so that is page one. This is our page two, complaint, corporate information. You put the, so if it is a complaint, a limited liability complaint, then you put directors. You put the names of the directors and their position here. You list them here. Mr. Rich, Mrs. Rich, Uncle Rich, Daddy Rich, Mommy Rich. You put all of them here with their position. Then the corporate office. All of this information, you must have gotten them. The MEMAT, the Memorandum and Articles of Association, will show all this information. When you are having conversation with your clients, you would have gotten all this information from them. Then you put them here. They love it when they see it on your report. So it is very important. Okay, contact number, you put it there, right? The company registration number. If it is a business name, you will see BN something something something. If it's a company, you see RC, you get the RC number. The names, the bank, and the name of the bank and the account number, you put them here as well. If they are using more than one bank, right? Then the name of the auditor and the address, you put it here as well. Okay. Then the other one is director's report. It is fantastic when you also have director's report in your report. It is fantastic. So always you can just leave it like this. Just change all these things. Change some of these things because it is complaint specific. Change it. Principal activities, you change this to director's responsibility. You likely not touch this. Yes, that's your director's report before you get to all of these things. Before you get to all of these things. So basically, this is how the Excel template works. This is how it works. And And this is also important because I wouldn't want a situation whereby when I'm preparing accounts using these templates, and you are looking at it, and uh, as I'm preparing the account, I'm also telling you, I'm also explaining where the data is flowing to or something. So you should understand how it is working, or how the data are flowing from one sheet to the other. You should be able to understand that. Okay, and that is why this is important. So I hope you have gotten the idea of how data flows through this template. It is very important, like I said, and this will also help you to understand how softwares work. So with the knowledge of this data flow in this Excel worksheet, you can use any software. Like myself now, I've used two softwares before. I've used Sage, I've used QuickBooks, and I stopped using those softwares for a very long time now. When you stop something, you forget it. Yes. But one thing is, anytime I pick the software, it will take me less than 2 hours. When I go through the software, I pick it up again. At worst, a day, I'm back again. I can pick any new software as well, and I will learn it on my own, and I will use it on my own. Okay, so this is very important. So I hope you have gotten the idea, and thank you for your time. I hope to see you, or I hope you hear my voice in the next topic video. Thank you and goodbye.